Welcome back to the Business Exit and Acquisition Playbook. I'm Trent Lee. Happy to be here. And today I want to dive into one of the most misunderstood topics in the small business acquisition space: absentee ownership. Now, you might be hearing about this online. You might think absentee ownership means freedom. You buy a business, put a manager in place, and it runs itself. The manager takes care of everything. You don't have to be there. You can sit back and do whatever, stay at the beach, stay at home, and the business just takes care of itself. But here's the truth: one of the biggest traps in buying a business is this mindset. In this episode, we're going to break it down: when absentee ownership works and when it's a disaster, why sellers, banks, and brokers get nervous for state absentee ownership buyers, and then a mental model called the 3M test that will show you instantly if you can run a business absentee or not. And finally, a practical step or a guide that you need to take if absentee ownership is your ultimate goal. So stick with me, because this lesson could save you from making a major mistake thinking you're buying a business that can be run absentee that maybe can't or shouldn't be. So here's a question: what actually happened that made me think this would be a good topic to film a podcast on, a video on? So let me give you the backstory. A seller I'm working with said something this week that a buyer really needed to hear. And it was really direct and honest. He runs the business from another country, completely absentee, at least from a physical standpoint. And we've got on this business, we've got multiple full price offers that are in, also from, at least in this case, out of state buyers, many of which who have zero experience. Sounds like a win, right? The seller runs it in a whole different country. Certainly someone in neighboring states could run it. But here's what he told the buyers, at least the ones without any direct industry experience. We had to get back to these guys who submitted an offer, and he said, I'll review your offer and I'll consider it, but honestly, please don't do this. It's worked for me because I've got 25 years in this industry. You don't even have 25 minutes in the industry. And the reality is, he's right. Running a business absentee isn't about luck, it's about leverage, experience, management, systems. Without those, you're flying blind. And if you don't have any experience, you don't know the management procedures and the best practices, you don't know how to set up systems, you're totally flying blind depending on someone else to handle all of that for you. So here's another question: why do so many buyers think that absentee ownership is easier than it really is? Because on paper, it looks good. It looks easy. The broker, including myself in this case, we write semi absentee or absentee in the listings. And buyers think it means mailbox money. They think, I'll buy it, hire a manager, or maybe there's already a manager there. If it's being run absentee, I'll just keep the manager and then just collect the checks. And there's a number of online social media gurus promoting that as well. But here's the hard truth: unless you have industry experience and really strong systems, absentee ownership is not freedom, it's chaos from a distance. Employees quit, sales dip, customers complain, and you're trying to resolve it from hundreds, if not thousands of miles away. That's not passive income, that's passive stress. And it's not a good sign because you don't have the direct industry experience to know how to operate it and run it absentee, run it from a distance. That's the biggest challenge. So let's talk about the 3M test. This framework, I want to just go through this with you so that you can remember the story and have a tool that you can actually use when you're looking at a business to determine, can it be run absentee or semi-absentee. As I mentioned, it's called the 3M test. We're looking for management, model, and market. So first off, management. Do you have a proven, trustworthy manager in place who can run the day-to-day operations without you? Now, I'm not talking about the seller's manager that you hope is proven and trustworthy. He might be or she might be proven and trustworthy for the seller, but he has or she has no allegiance to you. There's no culture built between you. There's no trust between you that has been built. So hoping that the seller's manager and the seller's employees are going to be just as loyal to you as they were to the seller is a risk. And I don't recommend buying a business that's a hope. You're just hoping that works out. You don't have proven management in place that you proven for you as an owner operator. The next model is the business model structured so decisions can be made based on data and processes, not gut instincts. If the whole business relies on the owner's judgment calls, you can't run it absentee. Sometimes the business owner is the bottleneck, whether they're there physically or whether they're not there physically. And sometimes brokers will say if they're not there physically, that means it's semi-absentee, but they're actually doing a lot of the work just from a distance. But they can still be the bottleneck. So the model doesn't work because they know how to operate the business. They know the KPIs. They know the key performance indicators. They know the early warning signs when the business is in trouble. They can tell what to do and they can navigate the ship being not physically there, but they're there in experience. They're there in loyalty that the customers and the employees have. They just happen to do it from a distance. So that doesn't necessarily mean it's going to be absentee or semi-absentee for you. And then finally is the market. Are you close enough to the market to understand what's going on? Out of state only works if you know the trends, the customer base, the competitors. Otherwise, you're running blind. So if you can't check all three of those absentee ownership is not likely a good option for you. And just because the seller ran it absentee or semi absentee doesn't necessarily mean you can or you should at the beginning. And that's the key at the beginning. That doesn't mean that you can't get to the point where you run it absentee. Once you do build and you satisfy those three, build the relationship with the management. Make sure the model, the processes, the procedures are built to run so that you, as the new owner, aren't the bottleneck and get to know the market, have the experience so that you can run it from out of state or absentee, not physically having to be there. So that's the key is you need to plan on putting in honestly a good 6 months, if not a little bit longer, depending on the industry and how hard it is to learn to really build this up and get into the business enough that you can then work yourself out of the business. And doing that from day one as an absentee owner is not likely. I'm just telling you, in hundreds and hundreds of transactions I've seen, very rarely do they exist? Of course they do, but it's very rare. And as a buyer, you don't want to really be putting yourself in a situation where you're hunting for a needle in a haystack. You're hunting for that one business. And then you have to ask yourself, if that business is really so good, that needle in a haystack, and you happen to find it, then why are you so lucky to buy it? Why isn't one of the employees buying it? Why isn't a competitor buying it? Why isn't the broker? If they're that good and it's really that absentee, I'll tell you what, I'll just buy it before we take it to the market because most businesses really can't be run completely, totally mailbox money absentee like we want to sometimes some of these online gurus talk about. So, another question here. So, how does this connect to buyers getting rejected? And this is relevant because sellers, banks, and brokers all run this test. They might not call it the same thing, but in their mind, just their gut experience, people who have done hundreds of transactions know that this is some basic common sense framework that determines if you can really buy the business and be absentee. And like I said, they might not call it that, but if you fail the 3M test, your offer isn't real. It's just a matter of paper. And even if you could get through and buy the business and get it across the finish line, are you really setting yourself up for success? One of the worst things to do is to personally guarantee a loan with the SBA, pledge your house as collateral, and then think you're going to run the business from out of state and let someone else, a manager that you don't know, that you have no experience with, no loyalty with, that they're just going to run the business. What you're really signing up for is you're saying, hey, Mr. Manager, the one that makes whatever, 60, 70, $80,000 a year, that's has no equity in the business, has really no loyalty to you, no experience directly working with you. You're banking on that manager who you don't know at all to be so invested and run the business so well that it protects your family finances and the personal guarantee and the home that you pledged as collateral for the SBA. Not to mention, why do SBA lenders hate absentee ownership? In fact, I had one transaction, a condition of closing prior to actually closing was from an out of state buyer who had perfect industry experience. They were the perfect buyer to do this state. They knew exactly what they were doing. And a condition prior to closing was that the bank get proof that the buyer rented an apartment or a home in the state where the business was located. Why? Because the banks know it's too big of a risk for someone to buy a business multiple states across away and actually think they're going to run it and run it. The bank's looking at their own loan, their own liability here, and they know that's not gonna do if it's someone even with the experience from multiple states away. So, buy local, buy within the area. That's a big deal. Banks don't want you defaulting because you can't handle the problem multiple states away. So, think about it. If payroll doesn't go through on Friday, can you walk into the office Monday morning to fix it? If your manager quits unexpectedly, can you step in tomorrow and keep things running? If not, lenders see red flags. That's why the SBA always favors local buyers who can literally drive to the business. And a local presence reduces risk. And brokers know this. Good brokers know this. They've done enough transactions where they can say, look, from a buyer who's got no experience, or even if you have experience, multiple states away, you're not as safe and you're not as likely of a candidate to get financing. Without financing, you can't really get the deal across the finish line. And that's what everyone's really trying to do here. But what if I'm willing to pay full price? Doesn't that solve everything with the seller? Not really. Sellers care about certainty, and a good broker should be helping a seller understand what buyer certainty means. A full price offer that will never close is worth zero. It doesn't really matter, but it's just a waste of time. A slightly lower offer from a seller who can actually close, now that's one that's going to get the attention because a slightly lower price, but with a solid buyer that's got industry experience, that's got a local presence, I'll take that 10 times over a higher offer on paper that's just not going to get across the finish line. So that's why my seller told those buyers, and I'm glad he did it, not just coming from me as the broker, but the seller said, please don't do this. He wanted someone who could actually succeed because he cared about the customers, he cared about the employees, and he knows he has enough industry experience to know someone multiple states away with no experience is a recipe for a disaster. So let's be fair, absentee ownership isn't a myth. It can work, but it really only works in two cases. You have deep industry experience, so you know how to diagnose problems even from afar, and the business has a proven management system in place. Now, that's where the risk is. How do you really know if it has a proven management in place that works for you, that's going to be loyal to you? So that's the challenge. So if you're looking at buying a business, buy local in your general market, close to your general market, buy within an industry that you have direct industry experience, or at least semi-direct industry experience. And if you don't, then go out and get the experience or go out and find a business in your market. It's just not worth going through the process of looking in markets all the way across the country. Buy local, buy smart, earn your stripes, learn the business, learn the industry inside and out before you dream of being absentee. Apply the 3M test before you even write an offer. You got to ask yourself, do I have management? Do I have a model that works? And do I know the market? Build it before you walk away. So if absentee ownership is the end game, then buy local, build the systems, build the processes, the procedure, build the relationship with the team, the employees, get the management staff in place and loyal to you, and then pull yourself out over time. That's how you create true freedom. You don't create true freedom from buying a business absentee from day one and thinking you're not going to put in the time. So, to wrap up, absentee ownership sounds great, but without management, model, and market, it's a setup for failure. Banks, brokers, and sellers know this, which is why out of state, no experienced buyers just get rejected, to be honest. Sellers want certainty more than price. So the smart path is buy local, build your systems, and earn the right to step away at a later date. Remember, the best price on paper means nothing if you're the wrong buyer. So if you're serious about buying a business, I want to give you a free resource. I've built a 30+ hour video course in school community that walks you through the entire buying process from finding deals to financing to closing. You'll get access to the community for free. There's nothing for sale, but it will walk you through real time deals and help you through the process start to finish. It's the exact playbook I wish I had when I started. And it's, like I said, completely free. So if this episode hit home for you, share it with someone who's said to you, I want to buy a business and run it from the beach. They need to hear the truth. And this is the truth. Take care.